Yeah, so mid-market funds are getting a lot of traction at the moment, I suppose, because they simply have, on average, better performances, and so people are looking for performance, are looking to differentiate, pick funds with a different angle.
Well, mid-market is basically natural destination of the money. There is quite a lot of money pouring into the market today, and that's where the majority of the buyout firms are active. So that will boost the mid-market activity and both from sale and acquisition side.
Mid-market investing, we had the interesting thing of having a British focused manager and a European focused manager. And quite frankly, the conclusions are Brexit or no Brexit. Investing in Britain and investing in Europe are pretty much the same issues, dealing with the same issues. And the major concern was rising prices because of so much money falling or flowing into the industry. On the other hand, plenty of opportunities on both sides of the channel.
You're right, we see a growing interest in mid-market, and I think that's due to several factors. First, we see that today the prices in general are more reasonable in our segment than on the large cap segment. So people want to go probably want to focus more money on that type of investment where they think that there's less risk because of those prices. And second, they understand that investing with the right GP, they can have a stronger impact on the growth of these businesses. On a very large business, it's hard to have an impact, because they are very big, already very settled. Conversely, on the mid-cap segment, especially on build-ups, on helping them to grow, that can have a great impact on the development of sales, profitability.
Well, in the context of increased fund sizes at the larger end of the market, I think people are going to see a flattening of returns. So to gain alpha, I think the mid-market is going to be much more prevalent compared to previously.
I think we continue to see significant opportunity in the middle market and in particular the lower mid-market, and that's due to there's still some value to be had there. Prices are typically lower, leverage isn't as high as at the top end of the market, and there's a very frothy buyer's market out there as well. So we're seeing a lot of very good exits coming from that end of the market, a lot of good value creation, and therefore good returns for our investors.
Mid-market, in my experience, is something that now is fascinating more than in the past, because, an example, the rule of the bank worldwide and mid-market change, and so we have the opportunity to put equity player and new financial guy in this game. In the past, mid-market don't try to find equity solution because it's easy to raise the money with the bank. But now the world changed, and so the mid-market may be a good opportunity for the equity and capital markets.
Equity markets in general are at all-time highs, and a lot of the prices some of the larger buyout funds are paying for their portfolio companies is sort of the top end of the market. So I think people feel in general that low to mid-market provides better value for many of the underlying deals.
A couple of reasons really. I think valuations are a lot more attractive for mid-market companies, and other than that, essentially opportunities for operational improvement as opposed to just using leverage makes that area a little bit more attractive than some of the larger companies we see.
We have seen a significant increase of the total capital available from all kinds of sources, from the private individuals and family offices to the government agencies and institutional investors like pension funds. We also see a lot of cross-border investment, so there's incoming capital from the US and Asia. We have seen the creation of a $100 billion venture capital fund, which is unprecedented. It's almost 100 times bigger than most of the things that we have seen before. So there's a lot of capital chasing good deals.